have the monthly price chart for Intel Corporation, stock ticker INTC. So for this price chart analysis, we're really going to take a step out here and look at the longer term trend history for this stock. Normally when I'm doing this type of stock analysis, I tend to focus on the shorter term time frames, definitely not the monthly charts. I feel that there's usually not as much to see on those charts, and the near term picture tends to be more important for people that are watching these videos on a daily basis. However, as many people are probably aware, Intel stock has really crashed very hard recently, caught large portions of the market by surprise. A lot of this downside activity was due to the fact that the company removed its dividend from the investor incentive package that comes along with owning this stock. For a long time, Intel has really been an outlier as far as offering a fairly attractive dividend within the technology sector. Normally, that's not something that you see very often. Some companies have started to do that a bit more recently. Apple does have some dividend prospects, but more recently we have seen Google and Facebook Meta platforms start to offer a bit of a dividend payout. Not very much compared to what would be seen in other parts of the market. However, it is a bit of a token gesture, and we are starting to see some technology companies move into the offering of a bit of a dividend. However, this is not something that's very common, and Intel was really an outlier for a long period of time as far as the size of the dividend that was offered. Usually technology companies will just be reinvesting in the business rather than paying out that money to shareholders as dividends. But recently, the recent major headline with Intel was that they are suspending the dividend in the upcoming quarter. So this was a major blow to the stock. This was not expected. It's really a historic decision. It's not something that was really expected by anyone. So, as a result here, the stock has really crashed through the floor, and a lot of these incentives have been removed for investors to be holding this stock for the long term. For all of these reasons, we do need to really take a step out here and look at the longer term timeframes. I could focus on the shorter term timeframes with this stock, but it becomes very difficult to see what exactly is going on with the stock because the price gaps to the downside were so substantial. So for these reasons, we really do need to take a broader view here, take a step back and look at what is actually happening to the monthly charts. So currently, we can see that the major near-term low comes in at $18.84. This would have been the price low that was posted during the August 1 trading session, and as a result, now we do have a new trend wave to the downside that can be used for Fibonacci analysis, and we will be looking a bit closer at these levels in a moment. So currently, to the downside, if we're focused on the potential for a bounce here, the first level that we would really need to start looking at would come in at roughly 2440. This level marks the old support zone that started to develop during the beginning of 2023, the month of January. So here we can see that the stock did take a major bounce after reaching this area. And then this is when we posted the ultimate December 2023 highs that came in at 5128. So overall, this is a major level to watch. Even now, even though we have broken through this level, because prior areas of support tend to work as resistance going forward. So currently, we're trading at roughly $20.60. If we did continue to move here to the top side, we would likely come into some resistance here, right around 2140 to 2190. Right around that range there. It's not an exact number because we did have several different tests of this price zone during the beginning of the 2023 trading period. So to the top side, this is likely to be the first level that could constrain prices going forward. If we did start to see a bounce here, I would expect to see some resistance coming in at this zone. From here, the next price level that I would be watching to the top side would come in at roughly 2680. 2670, 2680. This area marks the 23.6% Fibonacci retracement of this massive decline from the $51 level, 5128 level, which was seen during December 2023, all the way to these near-term lows. So as we can see here, we really do have a new series of price levels that can be watched as far as Fibonacci analysis is concerned. As a result, we would expect to see, a fair amount of resistance here from, roughly 24 and a half to possibly 26 and a half. Right in there, you do also have that psychological level coming in at 25. If the stock was able to break above that important psychological level, it would probably be a fairly major financial news headline on that trading day, given the fact that it would suggest that the stock is in store for some sort of recovery. But we do have to kind of accept the idea here that this could be slow going for the stock going forward. The reason that I say this mainly is due to the fact that the momentum reading in the relative strength index remains negative, and it will likely continue to be negative for quite some time because we're currently trading near the 33 level in the RSI, and we would really need to see a break close to the $60 mark in order to break this downtrend in share price momentum. So that's quite a ways away. I mean, this is a lot of wood that would need to be chopped in the relative strength index reading itself. So this negative momentum condition is likely to continue for quite a while. It's a bit difficult to say exactly when this would resolve itself because the indicator reading is not the same as the price. There are several different factors that can affect the readings in the relative strength index. So coming up with a specific time frame for when you would expect that to resolve itself it is more of a guess than I would like to commit to. So I won't be doing that. But as we can see here, we are trading very close here to oversold territory, and this does suggest that more than likely this near-term bottom is in place. Could we start to see a consolidation zone form at these lower levels? That's absolutely possible. That could be a bit disappointing for some investors that recently broke out of the prior sideways trading range, which did go on for quite a while. That was sort of a victory when the stock did actually break back above that $37 mark. But these recent developments have just been so substantial in nature, and they caught the market by surprise to such an extent that the reversal there to the downside was just incredibly substantial, and we did lose that breakout to the top side. I mean, it did occur, but as things currently stand, the momentum is clearly focused on the downside direction. So this 24 and a half to 26 and a half area is sort of the zone that I'm watching as a near-term target. We do have some wood to chop before we get to that point. So here is the current market analysis for Intel Corporation, stock ticker INTC. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.